Hello and welcome to the CNBC TV 18 special. I'm Shereen Bhan. We're coming to you live from Davos. We've been bringing you headliners through the morning and the afternoon, and it is time now for us to welcome a global CEO who's been on the channel when he first took over as CEO of Honeywell. Vimal, thanks very much for joining us. It was lovely to speak to you in June, literally in the week that you took over. It's great to see you here in person. So sum up for me what the last few months have been like for you in your new role, in this new avatar. I know that the focus has been, or the emphasis has been on really simplifying your strategy, on putting together your capital deployment plan, and on focusing on growth opportunities and growth engines. What has the last few months taught you?
So first, it's always hectic to start a new job. I mean, it's never easy. But the real emphasis have been to simplify Honeywell to its next stage of growth. Honeywell has done tremendously well over the last 15, 20 years. And we're really well positioned now to take three big mega trends and align Honeywell to that. That's future of aviation, because we are big in aerospace segment, automation, which is our core, and energy transition. And I'm really working to build Honeywell around these three big macros, and which support the planet on what the planet needs. We need more data, we want to go through energy transition, and of course we all want to travel. So we pretty much align to what we all need.
Well, there are challenges and complex challenges on each of those fronts, but let's break those up and let's start with automation, because that, of course, as you said, is the core of the business. An addressable market of 260 billion, industrial automation 130 billion. From the vantage point that you enjoy today, what will be the levers for growth in this space? The
lever for growth is going to be data, because the automation is a foundation for, we automate a manufacturing facility, a building, a warehouse. It creates data, and as the world wants to do AI, which it will, the automation is a foundation for it. So our growth is going to happen through monetizing data to create next level of productivity for our customers.
Okay.
And that's where we see more growth coming. And also I would say more sensorization of the word is still required. The automation requires you to do things at the physical level, and we're pretty good in measuring and sensorizing things. So those are going to be, some examples of where we will see the growth. But I'm particularly excited about how AI is going to impact the industrial world, because AI for me, you and me as a consumer is simple. We can use ChatGPT and build a social media tweet for us. It can go wrong, and nothing can go wrong much, but in an industrial world, things can't go wrong. It has to be deterministic. So how do you really think of context of AI in industrial world, in aerospace, in industrial manufacturing, in building automation? So that's an area which is pretty exciting, and that's going to be a big growth lever for us.
So if that's going to be the big bet, what are you doing to be able to beef up your capabilities? What are we talking about in terms of additional spends, investments, to make sure that you are on the cutting edge of this?
So cutting edge for that is we started investing in our IoT platform. We call it Forge since last 4 to 5 years. And that was the foundation on how we connect different assets we sell to our customer to this IoT platform. Because now we have a data on which we can build application. And that has been a significant investment by us over the last many years to build this IoT platform, which will then enable our different customers to kind of have ability to get the data and monetize the data for different productivity improvements, and that's where we are really headed towards.
So let me link this now to your capital deployment strategy between buybacks and dividends and, of course, the annual capex, etc. How much of that is going to go towards, say, tech spends? How much of that is going to go towards perhaps M&A? You've just done a pretty big one of almost $5 billion, an all-cash deal. Is that likely to be the route that you take?
Yeah, look, the portfolio rejuvenation is one of my priority, but M&A is done with discipline too. So you have to make sure that you do it the right way, and you don't want to blow away our shareholders' money. But our strategy is we have committed to spend $25 billion in 3 years window, which spend between dividends, capital spend, share repurchase, and M&A. The dividend and capital is more or less fixed. We spend about $4 billion a year between the two, so 12 is fixed and 13 is variable. We'd like to spend more money on M&A as much as possible, and the exhibition of that is we committed almost $6 billion in 2023. Some of it will get spent in 2024, and that's a route I like to take to balance out all the 4 elements of our capital deployment.
What's the picture looking like? I mean, it's been a challenging macro environment through 2023. Though the worst case that people were fearing didn't pan out. We didn't see a recession, at least not in the large markets. But is it impacting confidence, business confidence? Is it impacting spends? What's the expectation and the anticipation?
Look, when the planet is stable, it's good for everybody. And when the corollary is also true. So we'll like the stability to remain. I would say long cycle investments, we haven't seen those getting impacted with a certain uncertainty exists, but short cycle they do. And certainly that impacts on our growth rates. So all things being equal, we'll love stability and we'll like to make sure that things are, and India is a great example of being a stable place. We are doing, growing there at a, double-digit rates for many years. We see that trend continuing. Last time we met, we talked about, I see a path of 15% growth. We indeed, grew 15% in India last year. We probably will do same in 2024. But that's a good fact of stability. The country is stable. The policy regime seems pretty consistent. And that helps the businesses because now you invest and you continue with the growth.
Talking about India and the growth that you just spoke of, what could it potentially mean in terms of your business in India? What could the size be over the next few years, given the fact that you've got an economy that's growing, and you've also got on each of these fronts that you've identified as growth engines, growth coming in?
So look, first of all, our doubling our India business in the next 4 to 5 years is imminent. That's bound to happen. But exciting opportunity for us is not only the domestic business growth, but how do we source more from India? That's something which is new. As made in India is becoming more prominent, our ability to source from India is going to become a critical vector. We set up a new manufacturing facility for chemicals manufacturing in Gujarat. We started it last year. 100% product is bought by Honeywell.
Okay.
So it's made in India for the world, something which the country wants to promote, and we are the shining example of that. So I will see for Honeywell, India has 3 legs: the domestic business, which we will grow it very rapidly. We have been using engineering service capability in India for 30 years.
Yeah.
We started in 95. And now the sourcing, which is a relatively a new engine, whether it's mechanical, product, chemicals, and others, I see a huge potential of that in India.
So let's talk about that third leg that you just spoke of in terms of the sourcing opportunity of making in India for the world. And as you said, that this is just about, you're scratching the surface.
Right.
So what are we talking about? What's the aspiration, and what could it potentially mean in terms of investments to set up new manufacturing capacities, etc.?
So for that, the investments we do to our supply base. So that's how it works. So when we, for example, set up this chemical manufacturing facility in Gujarat, we committed a long-term volume to our supplier.
Right.
They invested their capital on strength of our commitment. So it's an indirect investment model,
Sure.
But we bring our business on the table and have our supply base invest. So we're going to enable a lot of investment through that model. Will we invest directly ourselves? We continue to expand our own manufacturing facilities. We have a big manufacturing facility in Pune, which we are expanding further. So that continues to be our base for our own products domestically and export. But supply base expansion, I will see that as a bigger driver.
And how does it stack up? You have growth regions that you've identified for the company. How does India stack up within the growth regions at this point in time?
It stacks up pretty high, I would say. I would say if we have to look at our next 5 to 7 year projection, we pick India as our top 3 priorities. It always have been our priority, but it has really moved up in the chain in terms of, SEDU in India is much more attractive. Economy has grown to a bigger size. We have a good position, so it all coming together. And more importantly, Honeywell's portfolio and what India needs is a strong fit. Aviation, energy, infrastructure, automation of infrastructure. This is what we do. So the fit between what India needs and what Honeywell brings is strong, which makes the case very compelling.
You've been with Honeywell, since 1989? So
yes.
you've been around the company for a long time now. But in your new role, as you look at the company with perhaps a new lens, I would imagine, what are you trying to do differently outside, of course, on the core business side where you've just outlined and articulated your strategy for us? How are you treating Honeywell differently in your new role and seeing it differently as well?
So seeing it differently to make it a growth-oriented company. It's a little bit, many people imagine that it's hard to grow up. We are $36 billion. How do you go at a high rate in such a large company? But given the end markets we serve are so favorable, there's no reason that we grow at 6 to 7% every year. How do we enable this company to grow at that rate is my mission. that we're making Honeywell as a growth-oriented company. That's a different mindset. That's a different way to think about innovation of our products. And that's the mission I'm on.
Well, it's been an absolute pleasure. Thank you so much. We wish you the very best of luck and look forward to seeing you
Same
back
here.
in India as well.
Thank you very much.
Appreciate your time.
Thank you.
Well, we will take a quick break here on CNBC TV 18, but the conversations will continue. Don't go anywhere. We're back in a moment with plenty more from Davos 2024.